Let's connect with Gopal Agrawal. He's Senior Fund Manager, Equity at HDFC Asset Management Company. Thanks so much for taking time out, and let's talk a little bit about the mutual fund industry, because we have seen a pretty phenomenal growth. The SIP accounts as well have grown. How would you talk or how would you view the entire space as a whole, and do you believe that we have a lot more room to grow?
Yeah, thanks for inviting me. So good afternoon. So I really see that mutual fund industry is really taking off very well, as we are seeing the financialization of savings are really increasing. And we have seen like change in tax structure in the last 2 years. And also the interest rates have a softening bias, which is making equity as an attractive asset class. And also what we are really seeing that in India, this formalization of economy and really the good earning growth in the last 4-5 years has led to very strong equity return, which really putting much more broader base of investors joining this equity market. And I feel we have still touched the surface. We have long way to go from here. We are still around 5% penetration. So we still, as this industry is getting matured and people are making reasonable return over a period of time, I think the long way to go from here.
Yes, indeed, a long way to go. Gopal, just wanted to understand, where is it that you have the most concentrated bets within your portfolio? Because, post this recent market correction, one has really made that sort of distinction, which one never did, between small and mid caps on one end and whether large caps are offering more value on the table or not. And within large caps, given the high amount of rotation within sectors as well that one is seeing, what are your biases in the market right now?
So very clearly, Aisha, in the last couple of months, the market has a very strong rally. We moved up very, very sharply. And now, with this moderation in the government capex and the moderation in earnings in Q2 results, we are really seeing the sectoral rotation is happening, and even it is being added by the Trump victory in US. So the FII's action on Indian market is really changing. So what I really have done in the last couple of months have added more incremental large cap to my portfolio and moved my money more towards the larger private banks, this IT sector, and also the power related space, where I really find medium to long term opportunities are very strong. And in this volatility, I'm using this correction to add some button down name across the sector, whether it is from auto sector or whether it is from the oil and gas space. So wherever there are value, even in real estate sector, we got some good names correcting. So I have added across, but primarily moved money into the large private banks, IT and power related sector.
Okay, interesting there, looking at the overall sectoral task, but I just wanted to understand how one should be looking as well when it comes to earnings, because there were a number of one-off factors as well, but I think the general sentiment is that this sort of a muted set of numbers is only going to continue into the coming quarters. Would those concerns or would those fears be validated, or do you believe that the previous quarter earnings were a one-off?
I would say that, the extrapolating the last quarter earnings may not be the right way to look at the market and potential of Indian equity market. The last quarter, we had a lot of one-offs added by the election, the heavy monsoon, and also, the off-season in India generally. So, and government capex was really weak last quarter. So one should not extrapolate what has happened in Q2 earnings. My sense is that things will normalize, and it has potential to deliver reasonable earnings growth in the quarters to come. But honestly speaking, as an investor, I'm also watching the pace of recovery, because the market is sensing very strong earning growth in H2 FY25, and it is being supported by a lot of management commentary on the con calls and everything, that the second half is likely to be very strong. So we are really watching whether that will play out or not. But in general, the looking Q2 earning as a base for Indian economy is not the right way to look at.
Gopal, so on what prognosis, other than, the points that you just highlight, do you believe that second half is going to make a comeback when it comes to earnings? Because you did mention that you do believe that government expenditure now that the state elections, large part of them are behind us, should actually improve. Of course, we have the wedding days as well coming in here, and typically seasonally higher consumption months as well. What gives you conviction that second half we will have earnings make a comeback?
So what has happened very clearly, let's say you have, as you rightly said, in the second half, generally the consumption propensity increases. We have a large number of wedding days in the second half. Third point is that, the agriculture production and realization are better than the last year. Water levels in the reservoir is also quite good, which will support the second half, the agri production. So, and also what we are really seeing in the first half, especially the government capex from the central government was quite muted, and generally, it picks up post Diwali, and because the activity on the ground picks up. So it gives us a lot of conviction that the second half is likely. Generally, we have seen 45, 60, 55. Even in the historical past, that the first half contributes to the 45% and second half contributes to the 55% of the spending. So if you just look at that way, then the second half really holds a lot of promises in terms of the earning growth actually.
The other niggling factor, Gopal, which has really weighed down on the consumption patterns, has been inflation. What is your own reading in terms of whether or not we'll have inflation a little controlled, which the RBI governor now terms as a horse and not an elephant anymore?
Yeah, so definitely, the inflation, inflation has actually surprised us very negatively. We have seen a steep increase in agri inflation in the last month, especially October reading was quite high. And as per the communication from the RBI itself, that we might have peaked in terms of the inflation and it will moderate as the time passes. So definitely, let's say the agri inflation is really still quite high, and it is expected to come down, with seasonality is likely to come in play. So that will likely to support the consumption. Second point is that the welfare scheme launched by many states, and we have seen even in the state which went into the polling in the last couple of months, we have seen increase in state government welfare schemes, so which will lead to some positive effect on the consumption side, and in general the economic activity picks up in the second half. So it will also support the overall consumption even from the rural India, which got impacted because of higher agri inflation in the past.
Fair enough. I wanted to also understand your take then on the entire mid-cap versus large caps, and how you're looking at that trade really playing out for the coming year. Do you believe that there will be a degree of outperformance within the large caps, or do you think that the mid-caps will be neck to neck?
What I would really say that good quality mid-cap will continue to perform well in the market, because what happened, the investors have a lot of appetite for mid-cap, because India is a growing country, and and we are still at $3.5 trillion economy. We have a long way to go from here. So the roadmap for growth for the mid-cap segment looks very promising. So based on the RBI's communication also, let's say the inflation might have peaked and second half will have a moderation in inflation. So there is a possibility of a rate cut, though the timing is very difficult to predict, which augurs also well for this valuation of Midcap. And the ongoing correction which in the marketplace, makes them relatively less expensive than what we had seen in the past. So my sense is that one should not completely write off this segment, though it can consolidate or it can have a time correction for some time. But for a growing country like India, the mid cap and small caps have actually a decent place in the portfolio of the investor.
Well, you highlighted why is it that you're liking private sector banks right now, or financials largely. I want to talk about the one sector which has been relatively a lot more resilient in the recent market correction. In fact, has done really well, I should say, and that's the IT sector. What do you think the IT stock prices are pricing in right now?
So, Asha, the two things which has happened in the near term, let's say the FII outflow led to, the currency depreciation in India, including entire EME space had a currency depreciation. So, IT being an export-oriented unit is being supported, the valuation. A few other things is that, like, let's say the attrition in this sector has peaked. We are seeing moderation in wage growth in this space, and with now quarter on quarter we are seeing slight improvement in deal wins and the execution. So that is also supporting. And investors have memory, of 2017 when the Trump came and the tax cut which their administration provided led to increase in discretionary spend. So market is pricing in the same phenomena in the months to come. So whether it will be there or not, time will decide. But that's a trade market is pricing in.
Sure. The other sector that I wanted to talk about, which has seen quite a fair amount of correction play out, Gopal, recently, has been energy as an entire sector. Do you think valuations are looking reasonable right now, and do you expect upside in the energy basket?
Yes, so energy space, if you divide it between the thermal and the especially oil and gas side, in the oil and gas side, we have seen reasonable correction in this space, because of some of the government action, and also, let's say the investors worry about the outcome of the state elections and whether continuity of policy will continue or these companies can take the pricing action, which was, the investors have a lot of worry. And so my personal sense is that we should look this sector in a holistic approach, even despite the geopolitical concern which is there, where we have two wars which on the ground is there. Despite this, we are seeing the crude oil is behaving well. It is trading in a band which is very comfortable for a country like India. Second point, I would say that in the near term, though the gas prices are higher, but the way the production is going is likely to increase in the next 1.5 years in US, Australia and Qatar, which should support the lower even the gas prices going forward. So one should not very much worried about very, very short term. The unfortunate part of the market is that nowadays investors really focus on quarter to quarter, and all this is really hurting the valuation in some of the space. My personal sense is that if one take medium to longer term view, then this sector offers us very good potential in terms of earning growth and also free cash flow generation in this space over time actually.
So is there a basket within energy plays? What exactly are you most bullish on, considering it's a pretty large sector?
No, I am playing across actually, because I really feel that the valuation in this sector is quite reasonable, and if you look at globally also, market is now taking a view that both ICE and EV both will survive actually. If you go back initially in 2017-18, market has taken a view that EV will take the center stage, and ICE will have a negative growth. Now we have come to a situation where both ICE and EV will survive. So in such a situation, the investor should take a holistic view on the sector rather than taking like a very short term view on the events actually.
That you get as well when it comes to the overall liquidity situation, given what we've seen pan out in the year gone by. What's the expectation? Will it be more of the same, where the foreign investors will continue to remain on the sidelines or remain net sellers of India?
See, my personal sense is that now most of the FIIs are like equal to slightly underweight on India. Like they have come to their their aggregate portfolio basis. So let's say there are a lot of expectations about the policy changes in US. So once investor will assess it in the next 3 to 4 months, they will be in a better position to take a call. Where to place their money. There is a really in the short run very knee-jerk reaction is happening because of our poor earning growth in the Q2 and expectation of a tax cut in US and earning upgrade there. So whether that phenomena, our earnings, if it recovers, and what they are expecting in US, if it is unlikely to play out the way it is being expected, then definitely investors have to look at a growing economy like India. So I would place that India is well positioned from a medium to long term perspective. That honestly in the near term the valuation had gone up very sharply, and add to that we saw a moderation in earnings. So these are very, very short term, and some reaction is really expected, and we should not we should respect this kind of reactions from the investors. So but one cannot negate the long term potential of Indian equity market. So I think the FIIs will take a very holistic view in the next 3 to 4 months to place their bet on the market.
Gopal, I just want to go back to the point that you were making about energy, as to how you believe it's the hybrid engines which are going to be the engines of the future, and it's not going to be either or, that's ICE or EVs. Tie it in with your views on autos, because there again we've seen very distinct moves between what two-wheelers have done and what PVs have done to what CVs are doing, and even within PVs you are seeing some bifurcations happen.
Yes, so what happens very clearly, let's say in this space, the best part is that the two-wheeler sector people had earlier wrote off because of emergence of EV and the threat on ICE. So, but as I told you, let's say the investors have assessed it, and they have found both are going to coexist. So the sector was really under-owned in their portfolio. So, and we have seen the reasonable earning growth in this space. So you have seen the strong move in two-wheeler stocks in India. In particularly on the four-wheeler, especially four-wheeler autos, we have seen this earning growth momentum has held moderated. And because of this, we are seeing the time correction in this space actually. Though I would really say as our economy growth will pick up, and the per capita income will rise, so four-wheeler has a good long-term potential. But in the near term, as the earning momentum in the four-wheeler space had moderated, so you are seeing some time correction in this space. Now coming to these CV, and CV had some moderation. We saw negative growth in this space, as we have seen also the investment in infrastructure and capex had slow down. So now there are expectation that second half there will be some spending increase. So definitely I would say that with moderation in steel prices and government capex likely to pick up, so this sector now offers better potential.
Appreciate your time. Thank you so much for joining in and giving us an all-round view on the markets, as well as what some of the important triggers could be and where it is that you see value.
If you like this video, then like, share and subscribe to ET Now.